You're watching Mirror 7 News. Stay informed, stay ahead for more news.
So here's the latest buzz in the Australian housing market. And it's something that's got both homebuyers and investors talking. Property prices have gone up again in July, and not just in one or two places. Every single capital city saw a lift. This marks the 6th month in a row where home values have risen, according to fresh data from property research firm Courtality, which you might remember used to be called CoreLogic. Now, this isn't just a small bump. National dwelling values rose by 0.6% last month alone, pushing the median home value to about $844,000. Over the past year, that's a 3.7% jump. What's really interesting is that these gains have come despite the Reserve Bank holding interest rates steady in July. Usually, you'd think the market would cool off a bit without a rate cut. But the opposite is happening. Economists are pointing to earlier rate reductions, especially the one back in February, as the spark that reignited buyer interest. Essentially, when rates go down, people can borrow more, and that pushes prices up. For example, a cut of just 0.25% can increase someone's borrowing capacity by roughly $9,000 to $10,000, depending on their income and deposit. Darwin led the monthly growth among capitals with a 2.2% spike in prices. It's still the most affordable capital city, but it's seeing strong interests, especially from investors. The rental returns there are solid too, which is making it even more attractive. House values rose more than units, with houses going up by 1.9% compared to 1.4% for units. And for the first time, the gap between median house and unit prices has widened to a record 32.3%, or about $223,000. Meanwhile, cities like Sydney, Melbourne, Brisbane, and Adelaide all saw steady gains. Sydney's median house value has now topped $1.5 million, a significant milestone. But while these price hikes are great news for those who already own property, it's making things tougher for first home buyers. Affordability has become a real sticking point. Prices today are more than double what they were compared to average earnings 20 years ago. And let's not forget about renters. Rents have also jumped, rising 1.1% nationally over the past 3 months. Darwin again stands out, with unit rents increasing nearly 3%. Limited rental supply and rising incomes are pushing rents higher, especially in places like Sydney, where demand remains tight. So what's next? A lot hinges on the Reserve Bank's next move. With inflation easing, markets are betting on another rate cut in August. If that happens, don't be surprised if home prices climb even higher, though many experts believe we're getting close to the affordability ceiling. Stay subscribed for more videos.